Sound money, sound money. Hey, round, round, round. Save, save, save. Build, build, build. Sound money, sound money. Hey, round, round, round. Save, save, save. Build, build, build. Sound money, sound money. Hey.
We're gonna do this. This is how we start off our shows. Okay, we start off on the left side, and we go. Save, save, save. Build, build, build. Sound money, sound money. All right. Save, save, save. Build, build, build. Sound money, sound money. Hey, round, round, round. Save, save, save. Build, build, build. Sound money, sound money. Hey, round, round, round. Save, save, save. Build, build, build. Sound money, sound money. All right. Save, save, save. Build, build, build. Sound money, sound money.
Hodl, hodl, hodl. Save, save, save. Build a. Sound money. Sound money. All right, guys. Hey, it's Ugly Old Goat here. And I'm going to go into a little bit of monetary theory. And for the fun of it, I am going to make a bearish case for Bitcoin. And you know what? I'm not the only one that has done this. And I'm doing this as a mental exercise, and also because there's also a very real risk. You know, a return to sound money is the only underlying threat to Bitcoin. And I'm not the only one that has this. I went and just picked up my desktop copy of Saifedean the Ammous, the Bitcoin Standard. And I want to show you, he has a chapter in here, and the chapter is entitled, well, How to Kill Bitcoin. And it's a How to Kill Bitcoin, a Beginner's Guide, guys. I don't know if you can see that or not. But that's the chapter. And he goes into some of the technical things. And I'm not going to go into that because I'm not an expert on that. And, you know, somebody like Jimmy Song would be, you know, how Bitcoin can be technically defeated. And, you know, I don't pretend to have any expertise on that method, on that study, but I do have a good understanding of what sound money is. And after he goes through some of the, you know, like the hacks and the, you know, 51% attacks and, you know, backdoors and all this stuff that people have been afraid of over time. He says one of the threats to Bitcoin is a return to sound money, and he specifically outlines that a return to the gold standard. And I agree with that, and I don't think it's something that should be discounted. And while it would be detrimental to Bitcoin hodlers, it would be very positive for everyone else and for the economies of the world and local economies if we have sound money. And I was thinking of this kind of just came across to me yesterday, and I woke up and I noticed Matthew Crowder did the same thing. Did you post that? This one?
No.
Oh, this one? All right. And he came up, it's just a 6-minute.
This is Matthew Crowder's Bitcoin University. Today I want to talk about how governments can easily kill Bitcoin. And this is...
Now, he's coming at it from a different angle. He is looking at this as how governments can kill Bitcoin. And he's looking at it from, well, there's 2 ways they can do it. If they stop seizing people's bank accounts for political reasons and other reasons, that would be one way. And also if we started, balancing the budget. So
it's a real threat.
It's only a few minutes.
It would be actually quite easy for governments to starve the Bitcoin beast if they ever decided to. Here's the real danger. As the Bitcoin block subsidy, which is currently at 3.125 Bitcoin, continues to get halved every 4 years, Bitcoin miners are becoming increasingly dependent on transaction fee revenue to pay for their equipment and electricity costs. Bitcoin miners get paid a transaction fee for every transaction that they include in a block that they mine. And these transaction fees move up and down over time in response to demand for Bitcoin block space. So if that demand for Bitcoin block space ever plummeted a lot, there'll be fewer and fewer transactions in each block, and miner transaction fee revenue will plummet, unprofitable miners will unplug, and the difficulty adjustment will kick in every 2 weeks, temporarily saving miners, but this would not be enough in a severe situation. If blocks are mostly devoid of transactions over an extended period of time, the Bitcoin mining industry will implode and Bitcoin will be finished with no miners left to secure the blockchain. So to destroy Bitcoin, governments need only destroy demand for Bitcoin block space. It's really that simple. Now, governments cannot stop people from transacting using Bitcoin, unfortunately for them. But what they can do is they can certainly employ certain devious tricks to cause demand for Bitcoin block space to plummet. Here's one trick that they could use that would be especially deadly. If governments ever stop freezing bank accounts and censoring monetary transactions, there would be little demand for censorship-resistant money like Bitcoin, and Bitcoin would definitely die a painful death. It's really so simple. Governments just need to stop doing things like this, like the Canadian truckers having their accounts frozen by the government, Navalny's accounts being frozen by Putin, PayPal freezing WikiLeaks donations, Tether freezing transactions that the U.S. Treasury doesn't like, and of course the banks, Bank of America, debanking people, freezing their funds, trying to silence people who have certain opinions by closing or freezing their bank accounts. So that would be prong number 1 in a deadly government attack on Bitcoin. No more money censorship would be absolutely terrible for Bitcoin. But here's prong 2 of a possible government attack on Bitcoin, and this part could be even worse. If governments stop spending so much money, this would kill Bitcoin probably in a matter of months, because you'd have no more deficit spending, government debt issuance would plummet, and central banks would be forced to stop printing because there'd be no government debt for them to buy at the margin. And at that point, the demand for assets like Bitcoin that protect against inflation would plummet. So if governments stopped censoring other people's money and began to live within their means, demand for Bitcoin block space would plummet, Bitcoin miners would go hungry, and this brave experiment that we call Bitcoin would sadly be over. So owning Bitcoin is especially dangerous for people who believe in government competence and thrift. You're not going to be able to sleep at night if you own Bitcoin and you love your government. If you do choose to buy and hodl Bitcoin, though, please consider the risks that I've outlined in this video. As we see increasing government benevolence and competence spread across the globe, the risks of owning Bitcoin are unfortunately going to skyrocket. Fortunately, though, we still have other instruments. We still have government-issued money like US dollars and euros and Australian dollars and Canadian dollars and yen and British pounds. This so-called quote-unquote fiat money could become an increasingly important store of value and medium of exchange over time in a scenario like this. If you enjoyed this video, be sure to hit the subscribe.
Enjoyed that, and I was thinking the same thing. Basically, what he's saying is exactly what this is about. Sound money will have a very severe effect on Bitcoin. Now, unfortunately, this also means that Bitcoiners have a self-interest in an inflationary economy. So we might have a very a political movement that most Bitcoiners won't like, and that is if there is a sudden or even I don't think it would take much. I think if 10 or 20% of the people wanted to restore the gold standard, it would be done. And my whole issue is I'm not so sure that the governments they're gonna have to be forced into it. And gold is the proven store of value, and because it has a low stock to flow ratio, and it is a governor for inflation. It doesn't stop governments from inflating, because they can certainly inflate on a gold standard, but what happens is they can't the promise is broken because they cannot redeem in gold. We have the same problem, you know, in Bitcoin, and Bitcoin, you know, I think it's unconfiscatable. That is the primary use for Bitcoin, and trying to fit it in this box of becoming cash, I don't think Bitcoin will ever be cash. It's not designed to be cash. It is an asset of its own right. It's your emergency funds. It's your funds that has no borders, and gold is perfect for national currencies, and a gold standard is perfect for cash. In fact, that is how governments got their revenue without taxation, is by issuing currency that represented real goods in the marketplace, and also issuing coinage and tokens that have a face value higher than the intrinsic value. That's what we had under the gold standard, where we had copper, nickel, silver dimes, silver quarters, silver 50-cent pieces, and silver dollars. And of course, they were all tied. The dollar was defined as a fixed amount of gold. So I think it's a very real possibility. I mean, and I don't think they'll do it willingly, but they will do it because it's their only way out. And that's what I see potentially coming, and why it's not going to surprise me to see a gold standard be resurrected. And you can almost see it bubbling in the market. If what's going on right now, I haven't looked at the markets since last week, but I suspect that what I've been saying is probably true. Let's go look at these markets. Let's go look at gold first. Oops, there's gold. All right. Well, look at that, guys. That doesn't surprise me at all. It's what I've been saying. Gold is extremely bullish. Now, there's a big difference between this gold market and the stock market and the Bitcoin market. You know, I'm not a Bitcoin bear, don't get me wrong. I haven't ruled out that 40K. Somebody's rooting back, go for the 40K. I'd be surprised if it goes down there now, but I certainly can't rule it out. But here's the most significant thing. This gold market hit contract highs, and it has sold off, and now it's just stronger than the Dickens, and it continues to be. Here's the weekly. If you notice, we took this out. We took out, you buy it down here. You had a second chance to buy it below the previous week's lows. This thing should just take off. And there's really I just see a super gold a bull market in gold coming. I think that 3,000 will be like a knife through butter. 6,000 will be no problem. I really think you're going to get a 10x or close to a 10x move. 18,000, even 25,000, it's not going to surprise me. Now, that's what and that is what will, this is how you solve, or this is how you get in a sound money program. Once this happens, it's just going to happen very rapidly. And all of a sudden, the dollar is going to be valued in gold. But it'll not be anywhere close to this gold price. The gold price is going to have to go a whole lot higher. Now, let's look at the Bitcoin market, because again, it's very significant what's going on here. Again, I'm going to do some studies on this. These ETFs, these ETFs are a nightmare, and the CME is not a blessing for the markets. In fact, it's totally corrupt. Originally it was going to be a deliverable contract, and they had this Beckett certificate, which wasn't really deliverable. It was just a certificate. It would be like getting in the gold market, when you took delivery, you would get a certificate from Iron Mountain Depository, City, or one of the major banks, Citibank or Chase or whatever, and they would have the gold in their vaults. And then physically you'd have to hire Brinks. You'd only have certain certified carriers. It had to be Wells Fargo or Brinks or a couple other carriers to pick up your gold and deliver it to what location you wanted it. This is basically what they had when originally with the CME futures were set up, so you would get this what's called a Beckett certificate. Well, what happened to the Beckett certificates? We're going to get into that in a bit, but what I want to show you is the difference right now. Here is the perpetual futures on BitMEX, which is the one I keep track of, which is kind of the same as spot. And if you look at this, again, we had a huge sell-off. We came back. We filled all these gaps. But the Beckett, the Chicago market, completely different scenario. Now, again, you had this gap. You had this huge 3-week gap, and we gapped down. We left all this trading up here. Well, look at this. We went up and filled this gap. I don't know, close enough. It was the low of 62,470, and we went up there to 64. Yeah, it went above. No gaps anymore. This gap is filled. This gap is filled, and we're going down. Now, this market's a mixed bag. If you're looking at the moving averages, this really is not very impressive. Now, you go here and you look at, I don't want to look at that. That's the Bitcoin farms. Okay, if we look at the spot here, this is a completely different scenario. And the moving averages have literally turned up. And this looks a lot different from this. You see the difference? Look at that. That's the mercantile. And this is your perpetual BitMEX, okay? And technically, whole different thing. You got a 9, you got a 1, 2, 3 up. You sell this thing, and it's going back down, okay? This, all it did was fill the gap. And if you look at these moving averages, 1, 2, 3, let's see, 1, 2, 3, 4, 5. It never took it. It never even challenged the moving averages, because you can go back 3 days, go back 5 days, and you're still way below this. Now look at this here, and you're way above it. Up here, you're 1, 2, 3, 4, and you traded above it for 2 days. Okay, and I traded up here 1, 2, 3, 4, 5. This day here, you're way above it. 1, 2, 3, 4, 1, 1. So this day here, you're way above. So actually, the moving average, guys, this is kind of bullish on the perpetual, but it's not bullish at all on the Mercs. You kind of have to watch both of these markets, and they're giving completely different signals. I'm kind of curious what the stock market's doing. Not that I'm a big, but okay, you got the same thing going in the stock market. You got these gaps here. You're rallying up, but this is not looking great, guys. You got a whole lot of people trapped, and the only market that really is on fire now is the gold market. And I see that trend. It's a major trend, and there's I don't think there's anything that's going to stop it. But the bull market is gold right now. I'm not saying Bitcoin's not a good investment. You know, we know it's never too late for Bitcoin. It has its uses. But don't think that these now we're going to go into a little bit. I wrote this article. Let's see if this is the article, or the California article.
No, it's the first one.
Okay. I went back and found this old, is Beckett deliverable or the Hotel California? Okay, now Beckett, just for your reminder, this was a warehouse delivery system that was going to work in conjunction with the Chicago Mercantile Exchange. This was going to be their, quote, deliverable Bitcoin. And it wasn't deliverable Bitcoin. For example, in livestock or grain, you can take physical delivery of the commodity. And this is how they sold the Bitcoin futures. That it was going to be physically deliverable, but it wasn't physically deliverable. What you got were these Beckett certificates. And then how you got their Beckett certificate, how you got the physical Bitcoin to your private address was never revealed. Now, in any other futures market, if it's cattle or soybeans or wheat or corn or gold or silver or anything like that, there's a specific amount of the commodity, and it's deliverable at a certain location. This was never done in Bitcoin. They made the promise, but it was never delivered. They made it look like it was going to happen, but it never did. And now this thing has turned out to be a Hotel California. It's gone. You go here, boom, here, regulated infrastructure for Bitcoin markets. I hit here, look what happens. It's gone. It doesn't happen. It just doesn't happen. It's weird. And then if you go here, I don't know what this video was, but it's gone. So I go down here, and I did find an article. I did a Google. They did not delete these Medium articles. So if you go here, I did find this Adam White article, and that has not been deleted, although it's way out of date. And if you hit he's still president of Beckett. And if you go here, apparently they do have some kind of an exchange, but it's not at all what I mean. They completely pivoted, and it's like nothing. I can't find anything on it. This is a total pivot situation. I don't know what this one is. Let's see. Here's another bit. Okay, and here's another Bitcoin article on it. And again, all of this is just kind of gone. The Beckett deliverable certificates have been completely eliminated. So again, when I first saw this, I said, hey, this looks real suspicious. Is it Beckett deliverable, or is it the Hotel California? Well, it turned out to be at the Hotel California, because you can check in, but you can't check out. So now what you've got on the CME, and they admit, I did all the research on it, now they just say it's a cash-settled commodity. It's a cash-settled ETF or futures contract. And you can't take delivery of the Bitcoin, which really is not good. It's not good for Bitcoin. It's not, you can play all kinds of games now with the Bitcoin market, because you put it on that kind of a platform. Now, a lot of these people say that this was done with gold. I disagree with that, because in the gold market, you could take physical delivery. And in this Bitcoin market, these futures contracts, you cannot take physical delivery. It is you get a cash equivalent, and good luck getting that cash into Bitcoin. So it's not. So if there's a real shortage of Bitcoin, you're not going to be able to realize that the hedge. It's great for a short hedge, but if you're doing a long hedge, I think a lot of people will get, could get in some big trouble because we'll find out. I mean, but it just doesn't seem right, and there's something going on here that I have not been able to read. I don't claim to know it all, but again, this CME futures contract is not what it was originally purported to be. They've changed it, and they kind of quietly I did a little research on them. It looks like they're in financial trouble. They were two separate entities, and anyway, we'll leave it at that. All right, so as far as Bitcoin goes, here is the basis rate. Again, it's still high. That's not really bullish, guys. You've got, miners are hedging, and for good reason, because we're in a bear market now. Even if you rally up, I think you got problems. Microsoft, their average price again is, MicroStrategies is 35,000. They're probably some of the worst traders in the world, because we in our studies, if you started accumulating Bitcoin at the most recent highs, you're way ahead of the 35,000 price, as long as you dollar cost average and you purchase a fixed amount of Bitcoin every month. And let's see. Okay, and this is what we're looking at. We are in August 1st, that was the peak, and the technical situation is, hey, we took out the 2-week low, we rallied back up to above close to the previous week's high. Let's go look at this again. Okay, let's go. Okay, this is the weekly. Now, if you take out this week's high, I would be a seller. But now, if you look at the Merc, let's do this. I think we already did that. No, we didn't. But we rallied up here on the Merc, and this just isn't bullish yet, guys. It's just not. People are looking. People that are long up here, they're just looking to break even. So the psychology behind this: are we going to let them out? And if they do get out, it's probably going to just keep going up, because that we clean the market cleaned their whistle. But so the question is this liquidation over with? And it's way too early to tell. But I think your protection right now, the safest thing to own right now is the gold. Everything in it says that we are in a bull market. All right, so that's it, guys. I wanted to go through that. I thought put up the link to that Matthew Crowder's video, because it is excellent. He came across the same idea that I had. I wanted to make the bearish case for Bitcoin, and again, a bearish scenario for Bitcoin would be the best thing for our country, for the world, and for our economy. But it requires a change of thinking, which I don't think that we have yet. But it won't take a lot of change for that to happen. Plus, the reserves are there. Governments do have gold reserves. The boomers, they've been buying gold. A lot of them have never really gotten into Bitcoin, but people my age, big believers on gold. Gold still remains the proven money, and it is more efficient in as a standard for cash. The problem that you have is Bitcoin. It just doesn't work as cash. It's your U.S. your local currency, wherever you're at, whether you're using the U.S. dollar, or the Mexican peso, or the euro, or or Canadian dollar, it's that local currency that's still the cash. And that's what you want to, that's what you do business in. Bitcoin has its use. Bitcoin has a huge use case. But the idea, and the reason I also wanted to outline this, is you have so many of these people that have been so irresponsible, talking about Bitcoin is going to go to nobody's under the lowest they do interview all these experts, and the lowest prediction, oh, it's going to be 200,000. That's low. A lot of them say, oh, it's going to be 1 million, and there's some are as high as 10 million. Hey, I've been through this before. We had the same idea, huh? That's an old article, but yeah, Bitcoin sucks as cash, and it's a lousy store of value. It's a great store of value for the long run, but it's not a good store of value in the short run. I've known that's why you do want to reward yourself with Bitcoin. That's why we have HODL. Okay, you HODL Bitcoin, you save, which I spell it SAVVY, savvy. You want to be savvy and occasionally sell some and reward yourself for being a hodler. And then the last thing that you do is that you build and what you want to do is be building businesses in your local economy. And there's two kinds of people in the world. There are those people that have Bitcoin and those that don't. Or as far as entrepreneurs, there's entrepreneurs that have Bitcoin and entrepreneurs that don't. And the thing is, if you're an entrepreneur that has Bitcoin, then you want to use that Bitcoin to build and you can actually be savvy and go into new businesses and build it. Whereas other entrepreneurs, they want to, as they're profitable in their business ventures, they want to be hodling and build that hodl. So it's a cycle that goes back and forth. And Bitcoin is a tool. It's not a panacea. It's not going to cure all your ills. Just as wealth does not cure all your ills. And all right, that's it, guys. We're gonna be developing this more and more, but that's the bearish case for Bitcoin. And I'm not the only one that has just come out to make it. I think Matthew Crowder did it more as a as a joke, as a what do they call that? Parody. And mine's really not a parody because I believe that not a parody because if the United States does survive, we're going to have to come back to sound money, and somebody's going to have to make that decision. I'd be very surprised if it's Donald Trump because he only knows an inflationary economy. He only knows. I have family members that have done extremely well because they've done government contracts. They're deeply embedded with the inflationary game, and I have other family, that works for the government. So they are part of the problem, and until there is a movement to change that problem and to solve these issues on an individual level. Instead of on a governmental level, and that's going to be a hard thing to overcome, particularly with the entitlement mentality that we have now. But you know what? When thinking changes, it happens. It's like, what do they call that? It's like a chain reaction. Once it builds to a certain point, it can happen very quickly. And there's very few people that are interested in sound money. I think most Bitcoins, keep the game going. That'll make my Bitcoin worth more. It's kind of like, maybe it's worth more while Rome is burning. And, I don't want to see the downfall of the United States. I don't want to see the world in chaos. But this is where we're headed, and we're either going to go that direction or we're going to go that direction and see it and can stop it. And it takes somebody strong to do it. It will take a kind of a strong man. It'll be taking like a ukulele down there in El Salvador, but sound money is a mentality. We wrote it into our Constitution. It was not an issue until the Civil War, and I know a lot of people think a lot of Abraham Lincoln, but he did a lot of very nasty things that contrary to our Constitution, and kind of set the precedent for where we are now. And his policies were corrected. In fact, it was because of his policies, it was in the aftermath of him issuing the greenbacks that the gold standard really emerged. And it emerged organically in the marketplace. And it worked so well that it was essentially nationalized when they created the Federal Reserve. And of course, it created the Federal Reserve at the same time they imposed the income tax. I think one of the most positive things that has happened is when President Trump announced this no tax on tips. Wow, that was a shocker to me, because it's planting a seed, guys. It has repercussions. If tips shouldn't be taxed, now what is tips for? You're tipping, you're giving somebody because they're doing something for you. They're working for you. And they're voluntarily working for you, and you're voluntarily paying them. What a wonderful kind of an arrangement and agreement to have. You know, all workers and all employees should be able to work on that basis. No man's labor should be taxed. And if we're freedom-loving Americans, we need to create a movement. And it's I think it needs to be an international movement like the old communist internationals. No labor should be taxed. No man's labor should ever be taxed, because he's a productive citizen. And this is and you know, the other thing that's kind of cool, I just read somewhere, even Pamela Harris, she's tried to hijack that because she realized what Trump is doing. He planted a seed into all of the young people out there that are working their butts off, tipping, earning, ambitious youngsters that are out there learning the trades and business, and they shouldn't be taxed. But no labor should be taxed. It shouldn't be limited to just, and the whole thing is by planting the seed, by them saying, hey, my tips should not be taxed, the same should be applied to all labor. But if you're not working, I'm not saying if you're unable to work, that's different. But if you're able to work and you're not working, well, then you should be taxed in some way. At least you should not be eating, and you should not be getting any benefits. So there's always work to be done, guys. That's what I say. There's no excuse to ever be unemployed. It may not be the work that you want, but there's an unlimited amount of needs out there. So like I say, I would love to see a bearish case for Bitcoin. It'd be great. All right. If we have, okay, I got two questions. So what is the bearish case? I'm not making any predictions. I would say it would be extremely healthy for Bitcoin to go under 40,000. And now that's a kind of a magic number, because that is that's the low for this year. I think we did it in Ethereum. I might pull up an Ethereum chart, but it's never a prediction. What I do is I give you risk warnings, and that's why I'm doing this comment now. I'm not saying that Bitcoin is going to go into a bear market. It's in a bear market now, the way I measure it, but I'm not saying that's going to go down to nothing, but it can go down to nothing, and it can go down to nothing. Okay, it can go down to nothing if we have sound money, because that's the use case for Bitcoin. We don't have sound money. All right. Yes, 36,000 would be amazing. It wouldn't last very long, I don't think, guys. It'd be kind of like what's happening. But maybe it could. If we go into a grinding bear market, it's just amazing how, because nobody is expecting this thing could drop below 40,000 right now. But who knows? Okay. I don't know what's going on, Zazo, but I'm just saying, if you look at the gold chart, gold is the only I can make a bullish case for gold. I mean, let me go. This is so incredible. This is just so incredible. And let's go look at the weekly again. Long-term weekly chart on gold. Is that it? Oh, no, I need weekly. All right. No. There we go. We have, this is what I'm looking at. Okay? This cup, huge, from 2012, 8 years, a cup. Okay? Cup and handle? Now there's the cup. We got 4 years of handle. This thing can go up as much as this whole cup and handle. This thing should go to $20,000. Okay? And there's not any other market that looks like this. Okay? It just doesn't. Bitcoin doesn't look like this. Okay? Bitcoin's a unique market. So I don't want to compare Bitcoin to other traditional markets. But it's not looking like this market. All right, what else? All right. Well, let me see if I can pull up Ethereum, because it did do some weird things. I think it took out last, but Ethereum sucks. You know, Ethereum should have done what it did. I was just looking at this the other day. Oops. ETH, USD, trading view. All right. Here, let me pump this up. Yeah, I was looking at this because I was wondering. There. I got it upside down. All right. Again, I don't look at ETH very much, but here's the thing. Here's Ethereum. This low took out. We took out the yearly low. Here's what I was looking at. This low, Bitcoin and Ethereum are similar in their chart pattern. Okay, now there is a big difference. Here is the okay.